Today, FTX's biggest celebrity endorsers get name-dropped in a class action lawsuit. New court filings claim Sam Bankman-Fried used FTX funds to buy property. And we discuss the risks of crypto contagion with Stéphane Ouellette of FRNT Financial. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos, coming to you from Austin, Texas. Now, digital currencies are mixed as the crypto market continues to digest the fallout from FTX. By noon Eastern, Bitcoin rose to $16,500, Ether ticked higher to $1,200, while Cardano fell to 32 cents. Okay, let's talk about the top stories. First, FTX's new CEO is slamming Sam Bankman-Fried and other former top executives in a new court filing. John Ray told the bankruptcy court in Delaware that in his 40 years of legal and restructuring experience, he had never seen, quote, such a complete failure of corporate controls and such a complete absence of trustworthy financial information as occurred here. The filing claims that executives had software to conceal misused customer funds, and it details how those funds from FTX were even used to buy property and personal items for employees and advisors. Sam Bankman-Fried did not respond to CNBC's request for comment, but SBF did take to Twitter DMs to try and explain himself on other scandals involving FTX. He spoke to a reporter from Vox, and in the published messages, SBF said that his altruistic vision was mostly made up, that he didn't realize his decisions were wrong in the moment, and that in his view, no one, not even regulators, will protect consumers. Next, a new class action lawsuit is calling out big-name celebrities that endorsed FTX. Tom Brady, the Golden State Warrior Shaquille O'Neal, Larry David, and Sam Bankman-Fried himself are just some of the celebs named in the suit. Now, the class action lawsuit alleges that FTX engaged in a Ponzi scheme and, quote, needed celebrities to continue funneling investors and to promote the sale of the company's yield-bearing accounts, which the suit calls unregistered securities. The lawsuit seeks to hold SBF and FTX's celebrity endorsers responsible for the many billions of dollars in damages that they caused and to, quote, force defendants to make them whole. One of the attorneys who filed the lawsuit tells us he plans on filing more related cases. Now, Florida-based attorney Adam Moskowitz says that some executives from FTX were geniuses at public relations and marketing and knew that such a massive Ponzi scheme, larger than the Madoff scheme, could only be successful with the help and promotion of the most famous, respected, and beloved celebrities and influencers in the world. Last, Binance CEO CZ is sharing more of his thoughts on the demise of FTX. In an interview with Squawk Box this morning, Zhao said that he was very shocked when he found out about SBF's behavior.
It was pretty clear pretty soon that there's misappropriation of user funds. The user funds are gone. At that point, it's clearly that he lied to his users, his investors, his VC investors, his employees. At that point, I thought I couldn't, whatever data that's in the data room, we couldn't trust anymore.
Now, those comments come just after CZ pushed back on claims from SBF that they were sparring partners. Zhao also addressed criticism from economists that crypto was nothing but corrupt.
If we look at the industry 5 years, 10 years from now, the industry will be much, much bigger. This incident will set us back a bit, but then the industry will become healthier.
All right, on to our main story. As the FTX fallout continues to impact the industry, I spoke with Stéphane Ouellette, the CEO of FRNT Financial, an institutional capital markets platform focused on digital assets, about whether other markets will see contagion. Okay, so I want to start off by pointing to your announcement this week that your company has not been materially impacted by the FTX and Alameda bankruptcies. I understand your firm has no direct exposure to FTX, but as a company focused on digital assets, how is the FTX fallout impacting you?
Yeah, I mean, the FTX fallout is significant disruption to the current financial services around the crypto ecosystem. Absolutely. Over the last kind of 2 to 3 years since the bull market cycle came together, the infrastructure around crypto has developed significantly, where a lot of kind of traditional I would say Wall Street style processes were kind of brought into the crypto ecosystem. And a lot of that has been, has blown up. So the reality is that the way that people have been doing business for the last 18 months, the infrastructure isn't really there to support all those activities right now. A lot of people were relying on things like unsecured lending, which is completely shut down. They were, there was market makers that were leaving assets on exchange, which now they don't feel comfortable doing in a lot of cases. And so people are, the ecosystem is definitely, like, I would say from a kind of an institutional perspective is going to freeze up for a little while until everyone gets the, gets the lay of the land, sees where the dust settles in a very similar way than Luna and Celsius did. Although this is, quite a lot more shocking to people just by the nature of what seems very likely to be a complete disregard for any kind of terms of service that was used. So it's catching a lot of people off guard. Obviously, it's leading to a slew of bankruptcies, and people are going to have to find a different way to doing business. And the firms that survive are going to have to find a different way to do business than they have over the last year and a half.
So in the last 24 hours, we've seen this wave of crypto firms announcing that they have been impacted by the FTX failure. We're talking about names including BlockFi, Genesis, and Gemini, among others. Do you think that containment is possible, or will the contagion continue?
I think containment is definitely possible. That's not to say that, it's going to be very hard to predict when contagion has finished running its course. It's essentially what you have with both the Genesis and BlockFi situations. If you have firms that had rehypothecation rights on their assets, I mean, that was in their TOS. And in the FTX, and so, they were therefore lending, and they are very much exposed to firms like that rehypothecate. Maybe they risk manage themselves appropriately and will be fine, but they're at least, those firms are at least exposed to these kinds of risks, and customer assets could potentially be risks in a contagion situation. However, there are many firms in the industry that their TOS says they do not rehypothecate assets, including FTX's terms, which said they did not rehypothecate assets. So, it's hard to, the breaking of terms of service is generally considered a fraudulent activity. So in that case, if there wasn't broad, mass breaking of TOS, ultimately, their contagion should stop somewhere. And I think Gemini yesterday is a great example, right? That Gemini had a relationship with Genesis where they had an earned product that, had rehypothecation rights, according to their terms, and that product has broken down. If Gemini has been operating in accordance with their TOS, and there's no evidence at this point to suggest that they shouldn't, their cold storage businesses shouldn't be impacted. Their exchange shouldn't be impacted, and all of that. It's only when these controls aren't in place that there is this kind of contagion in amongst the companies, where you have no idea what's going to happen if they didn't have those controls. But I think we can be optimistic that there are some good actors, at least in the space, that haven't done that. But we'll have to see. There's there's not a lot of trust in the ecosystem right now.
So the new FTX CEO, John Ray, in a recent court filing, criticized poor record keeping and the lack of experience of senior FTX managers. Now, Ray, who had supervised financial scandals, including the fall of Enron, said that in his 40-year career, he's never seen such a complete absence of trustworthy financial information as what happened with FTX. So how did this situation happen? I mean, looking back, were there signs that perhaps were ignored by investors?
There was very little evidence that would suggest that this kind of scale of fraudulent activity was ongoing. Was there red flags around the FTX Alameda Group? I think definitely. FTX in their growth has been extremely, extremely aggressive. That was how they were aggressive in the way that they built their products from a regulatory perspective. I mean, this is a platform. FTX International has Tesla futures that trade on the weekend, like stuff like that. I'm not aware of any license that allows them to trade those products, right? In addition to that, they grew so fast. Crypto companies have unique security risks, and it's a nascent industry. And a lot of the security elements haven't been fully solved, and they're difficult problems to fix. When you see growth of a company to that extreme, then okay, yeah, there's very likely possibilities that there's been money gone missing that hasn't been noticed, et cetera, et cetera. The firm had claimed to be audited, which is something that still hasn't had a lot of clarity around. And I think that a lot of clients most likely put their faith in the audit, and that the investors of STX have put in the audit. And we're yet to hear really what happened on that side. And finally, I mean, Alameda was known to be a very aggressive trading firm, right? And so, they are well known to be seeking leverage amongst different crypto participants over the last 9 months. And, the last 9 months hasn't been a great trading environment. So the fact that firms over the last 9 months were seeking aggressive leverage, it's going like, what do you need all this leverage for? So those were the red flags. Now, for what's been alleged here, where FTX was essentially purchasing other tokens with client funds, I don't think there was a lot of evidence that the public could have seen based on that. And I mean, that is relatively unprecedented. It's certainly unprecedented at this kind of scale of anything that we've ever seen before in cryptocurrency. Essentially that client funds were being sent to different firms, and in addition to that, they were being used to convert into tokens that were aligned with the platform. So it's hard to, even for those that saw the red flags at FTX, and I would count myself to be one of them. It was extremely difficult to imagine this level of malfeasance. It's extreme.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.